Holy smokes, folks. I just opened the Hungry Bowl app, and what do we see? We see Bitcoin now in the 18,000 range. Yes, it is under 19,000. Ethereum is now under 1,000 now at this point in time, and everybody is wondering, should we be buying Bitcoin right now? Should we be buying Ethereum right now? Now, people get very emotional when it comes to crypto, I notice. You have one side of folks that say no price is worth buying Bitcoin, Ethereum. They should go to zero, right? You have another crowd that says, buy, we're never going to get this cheap, right? And people get very, very emotional about this. And so I want to take you through actual information, data. I want to show you some very important things in this video. And we'll come to a conclusion if now is the time to buy Bitcoin and Ethereum or if it's not so much, okay? I don't get emotional about this. It's best to just look at these things logically, look at the data, look at the information we're being presented, and make a decision rather than all these strong emotional feelings that people like to feel, and especially in a collapsing market like obviously we have right now, which, to be quite honest, Bitcoin and Ethereum have been in a collapsing market for many, many months now. It's just gotten really, really ugly very recently here, okay? So I appreciate you guys joining me, and I hope you appreciate me just taking you through all this logically and looking at the information, okay? So first up here, looking at a chart here on Hungry Bowl, Bitcoin just reached a bottom here recently of 18,840, and as far as Ethereum, it just bottomed out recently at $976. Those are the bottoms as of right now, and 3 hours from now it could be a bigger bottom, and 4 hours from now, tomorrow, it could be a bigger bottom. The way Ethereum and Bitcoin have been collapsing, it's basically like a new low after new low, and maybe you get a recovery for a day or two, and then it's just down to a new low. And that's essentially kind of what we've had playing out here, okay? Now, the first question you got to ask yourself is, what type of assets are Bitcoin and Ethereum? And I don't mean like, is it a crypto? No, that's not what we're asking here. What type of assets are there? Because there's different forms of assets, okay? The type of assets Bitcoin and Ethereum are, they're what's called risk-on assets. They're a tier 1 risk-on asset, okay? A tier 1 risk asset. This means a tier 1 risk on asset means essentially they're going to have massive ups, they will have massive downs. Every single person I know that has substantial amounts of money in Bitcoin and Ethereum, here's what they tell me, okay? You want to talk about the big players? I know several people that have $1 million plus invest in Bitcoin and Ethereum, right? That's like 7-figure people that have 7 figures plus in crypto. What these people tell me time and time again is they've always gone on record of this. They expect Bitcoin and Ethereum to go down between 70% and 90%. They expect crashes like that, okay? When you have an investor base that understands the risk they're getting in, that's a tier 1 risk on asset. When you talk about folks who are, hey, if this goes down 70%, 80%, 90%, we come to expect that, right? They obviously are expecting these things to double up, triple up, quadruple up, 5x, 10x, 20x in price over the next, 5 years, 10 years. But they also are in this position where they expect 70, 90%. It's a very different investor base than, let's say, Microsoft stock. If you went up to a Microsoft shareholder and said, do you expect Microsoft stock to go down 70%, 80%, 90%? It would laugh at you like, no, of course not. Like, what are you talking about? Like, that's never going to happen unless like the world ends or something, right? So you got to understand, it's a very different asset class when you're dealing with Bitcoin and Ethereum. They're tier 1 risk on assets. They have late stage rallies. They're usually, usually toward the tail end of a overall good financial cycle, a bull financial cycle. They're usually one of the last to kind of really go on that late stage rally. And they have they attract a base that will leverage into that because they attract folks that are looking to take more risk, right? And folks that are taking more risk, guess what? They're the type of folks that are willing to usually take more risk in margin, in debt, to invest in these instruments, right? Because that's just naturally who a lot of those folks are, okay? So it's very important to understand who what this is, right? Now, if we get confirmation of this by looking at something like a chart of Bitcoin, right? Right near the NASDAQ peak, essentially, guess what also hit peak? Bitcoin hit peak November 8th of 2021. Now, as more economic fear started coming, capital market fear spread, guess what happened? Bitcoin has continued to fall and fall and fall and fall and fall. And recently, it has gotten really, really ugly, as the stock market has gotten very, very ugly recently as well, right? And so you're seeing a clear correlation here between something like, let's say, a lot of the higher growth stocks and something like a Bitcoin. And if you followed Bitcoin's price movement here, you're going to find that's actually very, very similar to something like a Netflix stock, to something like a PayPal stock, to something like a Teladoc stock, and to a lot of more risk-on stocks in general. You're going to find it's a very similar move to exactly what Bitcoin has done here, essentially, right? And if we pull up Ethereum, the same exact thing has played out in Ethereum. November, Ethereum peaked right under $5,000. Right now it's under $1,000. That's obviously a massive drop off of almost 80%. But it finds this correlation perfectly with the NASDAQ as well. They literally all topped within a couple days of each other. Isn't that amazing, right? And then basically since that time, it has been very, very rough. Now the difference is, and this is where you begin to figure out what's a tier 1 risk on asset versus not. If you look at the NASDAQ since that time, the NASDAQ's down about 34% versus Bitcoin in that same amount of time is down 60+%, and Ethereum's down almost 80% in that time, right? The NASDAQ is a riskier thing in general, but it's nowhere near the risk level as a Bitcoin Ethereum. But also, no one really invests in the NASDAQ and expecting the type of gains you'll usually get in Bitcoin Ethereum. Remember, whenever you get into an asset that you expect to have potentially huge upside, was the number one thing you have to expect. The number one thing you have to expect is that same amount of downside risk, where you could pull that thing down 50, 60, 70, 80%, okay? It's very important that everybody understands that point right there, okay? Now, in order for Bitcoin and Ethereum to go up, we have to have a risk-on situation. There's no way possible, maybe for a few days or something like that, but no way possible for a sustained rally to happen unless the financial markets go risk on. That's the only way, the literal only way you get Bitcoin and Ethereum to go up. We must get into a risk on market, okay? And so you got to ask yourself this: what are the chances we go risk on anytime soon, right? Right now, we're sitting at, inflation rate came in at 8.6% last week, which basically means the Fed is going to have to continue to raise interest rates for quite some time. The market's not going to feel like it needs to go risk on, the financial markets in general, are not going to feel like they need to go risk on until they see inflation come down consistently. Because we had 1 month where inflation came down, but then it went right back up to a new record level. We need to see several months in a row where inflation goes down, down, down. At that moment, you can start to think about, okay, maybe we're going to go risk on now, right? Because no one wants to invest in the market right now, in any market. It doesn't matter if we're talking the stock market, real estate market, Bitcoin, Ethereum, anything. No one wants to buy anything, essentially, other than maybe a few people, but the big money does not want to buy until they see a situation where the Fed can start to chill. And when you talk about inflation up here, the Fed can't chill. They're going to continue to pump interest rates, which is just going to lead to more and more economic devastation and more of what's called the wealth effect being destroyed. And the wealth effect is a very important thing for everybody to understand that's watching this video right now, and especially if you're investing in anything like Bitcoin and Ethereum. The wealth effect, what that essentially means is if somebody has a lot of money, let's say in real estate, they can use that money as proceeds to buy stocks, to buy crypto. If somebody has a lot of money in crypto and is doing very well, they can sell some of that off and use some of that to buy real estate. And all these things can help each other out, and the wealth effect builds and builds and builds. What we have going on right now is the worst situation I've seen for the wealth effect probably since 2008, 2009. Everything's being absolutely decimated. The stock market's being decimated, Bitcoin's being decimated, Ethereum's being decimated, all simultaneously while real estate's about to get decimated, all at the same exact time, with a Fed that is not here to help anytime soon. The Fed might start to help in 6 months, 12 months, but that's like forever away. Meanwhile, everything's just in complete free fall right now, looking and saying, where are the buyers and when does the selling pressure end, right? So that's something very, very important to understand there, okay? Now, On top of this, this is extremely important, extremely important. You have all these other situations going on, and the lower Bitcoin goes and the lower Ethereum goes, the more issues this is going to cause, okay? So there's been a lot of things said out there about MicroStrategy. MicroStrategy owns, last time I checked, it was over 130,000 Bitcoin. And there's been a lot that's been said, and I've heard everything between, they could get some type of margin call or have to come up with some extra collateral if Bitcoin was to go under 21,000. But then I've also heard conflicting things like, oh no, it's 3,500. The 3,500 one's hard for me to imagine. And the reason being is MicroStrategy's loaded up when Bitcoin was in the 30s and 40s, okay? And I think they even got some in the 50s. So their average cost, I don't know, it might be 40-something thousand, all right? Now, if MicroStrategy's average cost is that high, is it really possible that Bitcoin could go down 90+% and it would take 90+% for them to even get a margin call? It doesn't make sense. It's not the way it usually works ever, right? So I don't know. All I know is it's a confusing situation. It's a mess. People are trying to figure out what's the truth and what is not. Somebody's saying this number, but is that really accurate? Because if you do the math on that, it doesn't add up. And so at the end of the day, guys, this is something that causes more fear in the market, because MicroStrategy is a thing that's lingering out there that everybody is like, this is like the boogeyman. Then this came out in the last 24 hours. Cryptocurrency focused hedge fund 3 Arrows Capital has hired legal and financial advisors to help work out of a situation for investors and lenders after suffering heavy losses from broad market sell-off in digital assets, the firm's founders said on Friday. We have always been believers in crypto. We still are. We are committed to working things out and finding an equitable solution for all our constituents. Oh boy, that does not sound good. You read through the tea tree leaves there. Oh boy, okay. They're nearly decade-old hedge funds, so about 9 years, which was started by former schoolmates, had roughly $3 billion in assets in April this year. I'm sure it's got to be a substantially lower number now. That was shortly before a sudden collapse in the values of Terra USD, a so-called algorithmic stablecoin, and a sister token Luna, so I guess they had a bunch in that. 3 Arrows is exploring options, including asset sales and a rescue by another firm. The fund is hoping to reach an agreement with creditors that would give it more time to work out a plan. The firm is still in operation as it seeks solutions. The worst part of this whole situation, guys, is not just that 3 Arrows Capital right there. The worst part of this whole situation is the lower Bitcoin and Ethereum go, and the lower all these cryptos go, the more of this stuff is going to become like back page stuff, because there's going to be so much of it happening. And so if there's not Superman needs to come save Bitcoin in Ethereum and the whole crypto market right now. And if Superman doesn't come to save the day, there's going to be so much more of this because of the leverage in the market and how many of these things were going on, essentially, where the lower the prices go, the more this one pulls out, and it leads to more selling pressure, which leads to more selling pressure, which leads to more margin calls, which leads to more companies trying to come up with collateral and figure out these situations. And right now is the worst. And it's going to get even worse. One of the worst times to try to find somebody to bail you out in these situations, because everybody's sitting around right now like this. They're sitting around like this. Like, if you're another firm that's maybe in a better capital position, you don't really want to save anybody right now if possible, because you're trying to hold on to all your capital because you don't know what's coming over this next 6 to 12 months. So you're sitting there and you're like, I don't know if I really want to save that. It reminds me of if you studied kind of what happened in the great financial crisis. There were investment banks going down and things like that. And what you saw is a lot of banks refused to come in and step in and buy these things. They that stock was, of that investment bank was $100. It's $3 now. We still don't want to buy it. And the Fed had to step in and try to force, these other big banks to kind of take these guys over for pennies on the dollar, essentially. And so that's a situation you get into when you're in tough times and, everybody's trying to keep their capital around, right? And so this is a very, very scary situation for the overall crypto market, because it could get, worse before it gets better. Then you add in the Celsius situation, right? Everybody remembers what happened with Celsius. That was just a week or two ago, that whole Celsius, and that might get worse before it gets better as well. Holding customer money and all that, they're not in a good capital position. So that's ugly, okay? Now, What I'm showing you here is extremely important. This is the price of Ethereum prior to Rona, okay, and prior to the massive money pump and things like that. Ethereum was under $300. It was like $268, all right? Ethereum right now is in the $900 range. Nonetheless, what we're seeing consistently right now is assets start to be valued like they were prior to Rona happening. We're seeing it with stocks play out. Some of these stocks are actually falling to levels they were, back in 2019, 2018, actually even prior to Rona. And so, is it impossible to imagine $268 Ethereum? It is not. And you might say, well, there's been a lot of progress that's happened with Ethereum. Doesn't matter, unfortunately, in the financial markets when you're going through one of these cycles. As, all these stocks that have fallen back to prior, where they were prior to Rona or even, years before that, all those companies made tremendous progress. But when the financial markets are in a sell cycle, and, you have all this devastation happening out there, it doesn't matter. None of that matters. All the progress you made, how many more people believe in it, none of that matters. And so, to see an Ethereum still fall another 60% plus from here, it's not out of the realm of possibility. Does it happen? We'll have to see. I'm not going to try to place my bets on that. But you got to understand the cycle you're in. You got to understand what's going on with financial assets. And it could get much worse, obviously, before it gets better. Bitcoin, prior to Rona, right? Bitcoin now, 18,000, 19,000. Well, Bitcoin prior to Rona was less than 10,000. It was $9,600 prior to Rona, right? And so, is it possible Bitcoin could fall 50% from the prices it's at right now? It's absolutely very possible. And there's a lot of crypto, people I know that have big money in crypto that would echo those statements, right? And so, when you see things like this, you got to understand, if you're hoping for a massive risk on where we just go up and up and up from here and we've reached the bottom and we're going back to 40,000, 60,000, 80,000, 100,000, it begins to become like where does that money come from? It's just not adding up, right? It's just not adding up even remotely at all. And so, in my opinion, if you are thinking about buying Bitcoin and Ethereum right now, you got to understand this crash could last another kind of 6 to 18 months here. And you got to understand, for instance, like Bitcoin could easily fall to 15,000, 10,000, 5,000, 3,000. And you have to be willing to accept that fully. Now, if you can fully accept that and you're okay with buying Bitcoin at 18,000 and it falls to 5,000, if you're okay with that, then, welcome, step in, right? But you really have to have a long-term mindset behind this. You really have to be willing to buy the dip and buy the dip again and 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 again. Because, when you're going through one of these cycles, man, you have to buy the dip a lot. And as somebody that's, I'm a long-term investor, obviously in stocks, I go through these cycles where I have to buy in and buy in and buy in for sometimes months when you're in one of these crashes. Sometimes if you get a big crash, you basically are going down for like 18 months and then you start to recover and you're still buying for another 18 months. So next thing you know, you're 3 years into this buying cycle between the downdraft and an updraft. And, it could be several years before you get to break even and you start making money again. Not everybody is willing to go through that. If you're willing to mentally go through that and understand if you're buying in today, it could be substantially lower, a couple months from now, and substantially lower even a couple months after that, and substantially lower. And it could be potentially 2 or 3 or 4 years before you get back to break even, never mind make money. Then welcome to the party, right? Outside of that, you can't mess with things in this sort of market with understanding like we're likely not going to risk on anytime soon. As far as trading, that's completely, if Bitcoin goes from 18 to 20 and then from 20 to 21 and then 21 down to 17, I'm not going to give, any perspective on trading activity. That's not my thing. But just from a long-term investor perspective, you just have to be ready to go down substantially more from here and just understand that you might have to dollar cost average a whole lot more. And that's the thing, because what we've seen consistently from a lot of these assets, from a lot of these markets, they're going back to essentially where they were prior to Rona. So much love as always, guys. Hope you enjoyed this video and a perspective on this. I appreciate you joining me. Don't forget to subscribe and have a great day.